Big mortgage change. Credit scores just got an upgrade. Explained for 2026. This could be one of the biggest changes to the housing market in years. The way your credit score is calculated for a mortgage just changed. And for some buyers, this could be the difference between getting approved or not. Hey everyone, it's David Hittle, doing business as Shop Kentucky Homes, LLC, with United Real Estate Louisville. I am your local real estate resource here in the Louisville, Kentucky area. And right now, there's a major shift happening behind the scenes in lending that most buyers and maybe even some agents are not fully paying attention to yet. But it's a big deal because it directly impacts who can qualify for a home loan. So, the change. Here's what's happening. The Federal Housing Administration, FHA, along with Fannie Mae and Freddie Mac, are now allowing new credit scoring models to be used for mortgages. Specifically, Vantage Score 4.0 and FICO 10T. These are the first major updates to mortgage credit scoring models in decades. So what actually changed? Big whoop. What actually changed? These newer models look at your credit differently. They can now factor in things like on-time rent payments, utility payments, or trended credit behavior over time, which means if you've been paying your rent on time for years, you might finally get credit for it. So why does this even matter? Well, this is huge for a specific group of people. Buyers who have limited traditional credit history because under the old system, if you didn't have enough credit cards or loans, you could struggle to qualify. But now, these models can score millions more Americans who may have been previously overlooked. If you want to stay ahead of changes like this one that may actually impact your ability to buy a home, please make sure you hit that subscribe button. It's on every video. Just hit the button because I break down this type of information every other day so that you can make smart decisions and not outdated ones. So what does this mean for home buyers? Well, if you're a home buyer, this could open the door for you. Especially if you've been renting for years, you've been responsible with your bills, but you don't have a long credit history. You may now have the opportunity to qualify than you would have before. What does this mean for the market? Well, let's zoom out. This could slowly bring more buyers back into the market, which matters, especially right now, because we just talked about how first-time buyers have been disappearing. They're now the lowest share of home buyers. So this could help reverse that trend over time. So what does this change not do? Now, let's keep it real here. This doesn't mean that everyone will suddenly qualify. This also doesn't mean that lending standards are getting looser. It also doesn't mean approvals are going to be automatic. Lenders are still going to verify your income, they're going to verify your debt, and they're going to verify your overall risk. This just gives a more complete picture of your financial behavior so that lenders can make better decisions. This is what I call modernization of the system. Instead of only looking at traditional credit, we're now looking at real life payment behavior, and that is a big shift. So if you are a buyer and you've been sitting on the fence or you thought you couldn't qualify, it might be worth revisiting because the rules are starting to change. If you want help understanding what you qualify for in today's market, please reach out. I'd be happy to walk you through it and connect you with someone who can actually help. And if you received value from this video, please hit that like button and subscribe, and you'll see me and I'll see you in the next video.